What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a Mullen update. Before we get started, please make sure to hit the subscribe button and hit the like button so we can get this information out to as many people out there as possible. Today we're going to be talking about Mullen stock, and we're looking at the chart that I mentioned before that I have not moved. We did get the breakout above the 1.618 fib ratio here that we were looking for, and when we drew our new Fibonacci ratio, we found that the new 1.272 was in confluence with the 1.618. Please notice that we did break out of this, and this could very well be a test. You know, the retracement here on this candle here could be a 1 hour test of the support of both of these ratios here. However, I don't like to see a 1 hour candle or even a 1 hour closure above this support range here. It would be better for us to see higher term time frames, like a 4 hour at minimum, to really validate that support. But we have a lot of things coming up to this level here that can serve as a pretty good support line. For example, we have the SMA 10 and the 7-day exponential moving average coming up, guiding us to the top, and this can likely serve as a form of support alongside both of these 1.272 and the 1.618. Now, let's see. I am doing this per request, and also I do want to share with you guys that I am also feeling a little bit of FOMO here, but we need to make sure that the data can support continuation to the upside before we make any rash decisions, right? We're smart traders here. We're not gamblers. So let's make sure that we can continue as such. Now I'm just looking at my notes right here just to see if we have everything touched on this chart in particular. Okay, just one more thing. This is beside the current price action, but please notice that we did start this this analysis based on a pretty, it didn't take too long for us to get this descending channel figured out, but that was from October 11th to about October 19th. So this was a good 8-9 day move for us to, track and live within the range of this ascending channel. And we did say that this could be a trend reversal formation because it is. And it's interesting for me to just keep these things back here, is that so you can see how we've been tracking it and how all of our support ranges match very well with everything that we talked about. Just I hope that if anyone who actually gives a shit about this is really looking into the parameters or the metrics taken or the discretion taken before we enter into a trade. Before we move on to the next chart, this is actually a good thing. Please notice that this is the 50-day simple moving average, this light baby blue color here, and it has made its move above the dark blue 100-day simple moving average and the 200-day simple moving average as well. Now, this is within the hourly chart. It is an extremely short-term time frame, so we can put some weight into it, but this is just for immediate short-term price action. I want to make sure that you guys do know that we're looking at a small time frame. Small time frames usually present some distortion, some a hazy view into the future, right? So raw price action here looks pretty bullish. However, I do have to say that this next area here, this is the newer 1.618 that we drew I think on Thursday or Friday last week, and this could very likely be an area of interest. And what I mean by interest is that if we don't impulsively move to the 2 fib at 70 cents and find support at the 1.618 61 cents, there's a high probability that we can actually find resistance at the one spot 618 and trade a range within the one spot 272 at 52 cents and the one spot 618. This is known as the golden ratio, or the golden ratio, right? So now the golden pocket is actually within the one spot 272 and the one spot 618. So this, or the golden zone, right? There's a lot of names for it, but this is a particular area of interest for day traders, momentum traders, for professional scalpers and stuff like that. Okay, so now we did get everything out of the way on this chart. Let's move on to the next one. We're looking at the 12-hour chart now. This is going to be a little bit of a larger time frame so that we can make some accurate validations for our next move. We have, if you can notice here, this candle here has moved above the SMA 100, the 100-day simple moving average, and we had talked about this on Thursday. We said that we could likely find heavy resistance at this SMA 100. Now we did. You see, the candle went all the way up to about 54 cents before retracing and finding this resistance on the SMA 100. However, it looks like FOMO did kick in, starting to do their thing and buying into higher numbers here. So we did. It looks like we found some type of support at the SMA 100, and now we've closed right up here at about the, let's see, what is that? At about the 55 cent level. Now, again, we're looking at the one spot 618 at about 61 cents here. That could likely be that area of resistance before we find support at the one spot 272. That's if. Guys, that is if we don't just decide to jump to the 2 fib at 70 cents and use the one spot 618 as a form of support. That's not, I don't find it as likely, is because the space between the one spot 272 and the 1618, it is the golden zone. Okay, so usually we can find some consolidation here. We can validate that we are in fact within this area before a continuation to the upside. Remember that Mullen is being driven by a good catalyst, the ELMS thing that we talked about the other day. So this is likely playing into it. Now, also, please notice that the SPY did run today as well. It ran a few percents to the upside, so this is just acting as more juice for Mullen stock. It couldn't have come at a better time. Better timing is what I'm trying to say. Okay, so let's go ahead and take a look at the notes here and make sure that we are going in the right direction. Okay, so if we were to retrace right away, I mentioned to somebody that it looks like we started another type of formation, but it's not visible through the smaller time. I'm sorry, through the larger time frames like this. It would more than likely be something like this here. So we can take it to this point, and this is in the cards. It's possible that we're doing something like this. Now this is wick to wick basis. So if we even drop this to the downside and made the adjustment to start the formation from this side here and touch the beginning of the candles here. So this could potentially be what we're looking at right now. Now, please remember that ascending channels are a bearish formation by nature. So, and as you can see here, we have 1-2 touches already, which confirms that we are within the formation. So, and we have now the third touch. Now, if you guys remember the golden rule of 3 that I always talk about, we always like to do the 2 touches to confirm the formation. We do the third touch, touch by the test of the resistance of the formation, right? So we'll do the third touch, retrace to accumulate. We'll do or consolidate for a bit, make sure that we can hit that demand zone, and followed by a true breakout. And then a continuation to test this newly converted resistance as a support, which, we're looking at the hourly. I can definitely see that possibly happening. I can see us retracing a bit, particularly to our last point of support, to the 46 cent level, before maybe we can touch the 618 first, retrace to the 46 cent level, consolidate a little bit, even wick down to test this here, and then try for a true breakout, which if you can see here, we'll just make a little bit of a lengthier adjustment here. say for example, we do 1, 2, 3, 4, 5, 6, 7, 8 hours, we're landing at about, or let's do 12 hours for the full after hours and everything, right? 8, 9, 10, 11, 12. So now if we draw a trend line from this area right here, you'll notice that we are right in confluence with the 1.618. So there is a potential to where we can touch this and retrace back, consolidate, and try it again. Now at this area here at 61 cents, I would really express some caution, because this could be the area of capitulation. But it is showing some. There is a lot of rhyming within this area here, so I would really watch out for that, guys. Remember, I don't read a crystal ball. I only read the charts, and I'm only going to tell you how it is, what I see, and based on metrics, right? I can't read psychology, so that means that I can't tell you if FOMO is going to come in. But we have been mentioning FOMO since down here. You know, we entered at about 32 cents a while ago, so we're doing really good. Good job, Mullen. Now, this is let's go back to the other chart and touch on a couple facts here. I still haven't gotten the results back from the back test on full expansion of BBWP. What we're looking at here is volatility represented by this indicator BBWP. The bottom indicator is what we pair with the BBWP in order for us to gain a bias and direction. The reason why we pair them together is because BBWP is direction neutral. When we start to print these red bars, and we're in a 12-hour time frame, so each bar here is a 12-hour period, or it's a 12-hour read. So please notice that our moving average and the spectrum line are just cooked. We are at 100% expansive levels here. Now, the stochastics, the momentum oscillator is still suggesting some upside, and you can see that we're within the bullish control zone here and within bull strength percentile. So, and we still have plenty of this is a very similar indicator to an RSI. So we can use terms like overbought in this area too. So we're very close to getting into the overbought zone, but we're still within bull strength. So this could present like what we're talking about, some temporary upside, probably another few cents before we can start to see the BBWP contract. One more thing about the BBWP, if I didn't mention before, it is direction neutral. So we're looking at expansive levels here, and when we go all the way to the bottom down here, these are fully contractive levels, both of which indicate a higher probability of volatility coming into the asset in the near term. Okay, so let's look at the notes one more time. All right, let's move on to a bias in direction for other time frames as well. This is very important for us to notice in this chart. First of all, we did call this a while ago. This was a massive bullish divergence that we saw within the 12-hour block, and we said 12-hour bullish divergence likely playing out now. Now, as you can see, what a 12-hour bullish divergence can have the power of, along with a catalyst and a moving market. This is, you can see some pretty explosive moves. Please do note that the 12-hour RSI, the 12-hour RSI is experiencing some. Yeah, we're at 83%. We're within the 80 percentile of overbought on the RSI. Now, I drew this trend line here so that we can zoom out a bit and just see how many iterations we've actually reversed, or how many times we've reversed from touching this particular zone. So this looks like the last time we touched it, and that the date is down here. Shows that was about June 2020. So it's been 2 years since we've reached these critical highs of the RSI. Now, before that, looks like we also touched it in 2017, December 2017, for a Santa Claus rally here. And let's see, before that, we have March 2016, December 2015, like very, very similar to this here. And also we have, wow, September 2014. So guys, 1, 2, 3, 4, 5 times in the history of Mullen stock, which, let's see, it's been trading since about 2012. And we've only touched this area 5 times. Now, please notice that these iterations are definitely higher up here. So if we can continue to the upside, we could. This is the highest iteration that we have, and it looks like it touched at about 92%, so within the 90 percentile before a reversal happened. So just know that we're starting to cook pretty hot within the RSI signals here. Let's see what else we can touch on. Okay, now within the 12-hour block, we have moved above the SMA 100, and this could technically be a pretty relevant area of support with a possible wake down to the 4618 at 4683, which rhymes with where was it? With 4627 at the 1.272 that we were talking about right over here. Now we can trade. We were talking about trading within the golden pocket. So there is a lot of rhyming within these areas, guys. So we could be facing some resistance soon before, after some short-term upside. Now let's go ahead and make a larger pane here so we can see a few time frames of the RSI to gain a better picture for tomorrow's session and the following days. So let's go ahead and start with the 30-minute up here. Let's put this at the bi-hourly. Let's put this with 6-hour, and the last one we already touched on the 12-hour. But let's look at the daily. Okay, so the 30-minute, we are moving from the bullish control zone. Oh, you guys, every single time, right? Okay, I have to do this for the new viewers, you guys, every single time. I'm sorry. This is gonna be fast. So this is a regular RSI setup. I have split the RSI into 2 sections. This top section being the bullish control zone, this bottom section being the bearish control zone. Now, as you can see, that this bottom half is split into 2, as well as the top half being split into 2. Why? Because this area here is the bear weakness percentile, and the area right over here is the bull weakness percentile. So this is kind of a nomad's land. We can be dragged into one another if we're not into deeper levels of the weakness percentile from either bears or bulls. The top portion is the bull strength percentile, and the bottom section is, you guessed it, the bear strength percentile. Now, just like any other RSI, we have over sold and overbought above 70, and oversold below 30. So we're looking at an entry into the oversold area, but we have plenty of upside that we can still work with. We are trading above the moving average, and with an upside pivot, it doesn't look so strong. We can even look at the 15-minute to see if it has it. But we're within the bullish, we're within the bull strength percentile with an upside pivot. It is suggesting an upside in the immediate short term. Bi-hourly is showing us a continuation to the upside as well within overbought percentile. Sorry, and we are at a 78, 72. We're still. Yeah, we could still have plenty of upside. I mean, look at this one here. This is 95%. So we are moving above the trading the moving average, like we said, and we do have that upside continuation signal. Hourly RSI is same case, just jumping into the overbought percentile above the moving average and straight with an upside continuation suggestion. 6-hour RSI is a little higher, right? We do have an upside pivot, however, and it is within the 77, still with some upside, trading above the moving average. Good signs here, you guys. Let's look at the daily. The daily has now, wow. Okay, so the daily impulsively moved into the bull strength percentile, and our moving average is just pitched to the upside just as well, suggesting a continuation to the upside. Tomorrow is likely to be a green day for Mullen stock. Now, I am not suggesting for you to buy or sell, but I am not a financial advisor. I can't tell you to buy or sell an asset, right? Please take whatever I do say in these videos as a form of entertainment. Do your own DD. Make sure to share with me what your thoughts are. We can always talk about this on Discord as well. But I am not suggesting entry in my personal style. The reason why I'm saying this is because I think I'm going to play long puts on this. And the reason why I am short biased or not short biased, when you buy a long put, you're actually still long. So the reason why I'm thinking that this could face downside soon is potentially because of all of these indicators being so, they're getting cooked. They're really red hot. So in my personal experience, I found better results when I am patient and let the FOMO and let the price action do what it's going to do, because we've been riding this for a few days now. We've been riding to the top, so we could let it get to the areas of interest that we're talking about. We can make sure that it doesn't sell off from, we can make sure that it doesn't continue on past the 61 cent zone here at the 1.618. And if we do gain some type of confirmation here, we can then, come back to our indicators and look at raw price action to see if there's any indication for a downside to where we can open long puts here and make money all the way down to these areas right here. We'll sell the positions, the long puts, and open long shares here or call options to the upside. So these are strategic plans. I am going to try my guys. There's a lot of requests coming in right now. So I'm going to try my best to get the data back for the expansive levels here, because this is, it proved that this is a correct iteration no matter which way we look at it. We reached the 90 percentile and continue on to the top. So, this thing could rocket ship, just like I said before, you guys. I'm not going to enter to go long. I am going to enter to maybe do a long put, though. So, and I'm looking at entry at potentially 61 cents, between 61 and 70 cents for a wick to the top. So this could be an area to accumulate long put positions to ride to a relevant support level here. Anyway, you guys, that's going to do for the video. If you have any questions, please don't hesitate to reach out to me on Twitter, on Discord, here on YouTube. And yeah, I'll leave you with that. Thank you so much, and I'll catch you at the bell. Adios.